Hello from me with the weekly blockchain brief. Today we'll be covering what's happening with FTX, some news from Fidelity, and at the end we're gonna announce how you can earn 100 CHSB, so please stay until the end. If you googled in the recent days crypto news, probably the first 50 titles would have been about FTX, so we cannot miss but share the latest updates on it. As well as if you really missed what happened, you can watch Pietro's Market Outlook where he covered the whole situation in detail. It turns out that Alameda Research and FTX were not as separate as previously reported, and as it would have been actually the ethical way of dealing. A portion of Alameda's balance sheet was FTX's FTT token. Reuters reported on Thursday that FTX used customer funds to prop up Alameda Research during market turmoil in May, and also allegedly FTX was always giving priority in the order books to Alameda's trades, which in terms of comparison is the same thing as, let's say, BlackRock partnering with Nasdaq to give priority to all of their trades in front of all other market participants, which would be highly illegal. Other misconduct that was found is that in the case of FTX, there are multiple entities globally where Sam Bankman-Fried is a director or owner alongside FTX executives. Eventually we'll learn it all if FTX ends up before bankruptcy court, where all the information will come out. And here I want to add something as an active attendee and speaker at blockchain events. I noticed that regulation-related discussions are found boring, overlooked, or regarded as restrictive. But this is the reality of the situation. If you're feeling safe to place your funds and trade on Charles Schwab or Fidelity, it's because they're regulated and because you know that your funds are safe and wouldn't be misused, and at least there is constant supervision, so if there is even an attempt for misconduct, the company would be brought to justice and you would, with high probability, recover your funds. Especially in SwissBorg, we believe that regulation is what will make crypto attractive again. And SwissBorg, as you know, is regulated. Our license in Switzerland doesn't allow us to touch any of the clients' funds, mismanage them, or gamble in any shape or form. This is why during all the past crises, like starting from Celsius, Luna to now FTX, while most entities losing money, you are never directly affected by the situation. The second news is again related to FTX, coming from BlockFi. If you remember, earlier in the year, FTX bailed out BlockFi, which now is potentially in trouble again. BlockFi said it could not conduct business as normal and it would be limiting activities due to the collapse of FTX. The company said in a tweet that the lack of clarity around the FTX's current situation meant it would pause all client withdrawals. It also told clients not to deposit to its wallet or any interest-bearing account. BlockFi's tweet came just 2 days after founder and Chief Operating Officer Flory Marquez tweeted that all BlockFi products are fully operational, saying it was an independent entity until at least July next year. Why July next year? If you remember, BlockFi and FTX announced that the companies had agreed that FTX will be financing or would be providing BlockFi a $400 million credit facility, which would allow the crypto exchange the right to acquire BlockFi. The price of the acquisition will depend on terms such as BlockFi acquiring a license for interest-bearing product. More news from Coinbase. While this news is not directly related to FTX, it's a result of the extended crypto winter. Since exchanges in crypto are still highly cyclical, Coinbase is also struggling to manage costs and underwent another cost-cutting exercise by firing more than 60 people. Staff was mainly from the onboarding departments, and this is the second round of layoffs, by the way, following the 18% cuts done 5 months ago. We can summarize that the tech sector is generally shrinking, since the news came right after Meta's announcement that they're also laying off 11,000 employees a few days ago. And let's finish it on a positive note. The positive news at the end are that institutions are not giving up on deploying resources in the crypto industry. As in every economic or financial crisis, the sector never disappears, just the players are changing hands. And Fidelity is positioning themselves very well for that. While the trust is shifting from the crypto-native companies, the institutional investors are eyeing for entities to place their custody and also trading. So Fidelity hasn't announced yet a launch date for that cryptocurrency platform, but interested investors now are already able to sign to early access list. The platform is called Fidelity Crypto and it will offer fee-free trades of Bitcoin and Ethereum. And the initial investment amount is extremely modest, starting at $1. And moving to macro, the focus of the previous week was the inflation data for the month of October, which came better than expected, and this caused equities to rally, and there was a brief spike in crypto as well, but that's to be expected with the current market turmoil and the industry-specific news. The consumer price index rose 0.4% in October, below the 0.6% that was the Dow Jones estimate. The data sent a possible signal that while inflation is still running high, price increases may have leveled off and could soon head lower. While the news is good, the inflation is still running at a 7.7% annual rate, which is too high and well off the central bank's 2% goal. Feds hinted that they will continue hiking, but with smaller increments, and the news came as a confirmation that at least for now there is no reason for bigger hikes. Let's move to the VC section. We believe that FTX events would affect also the VC sector, and especially given that most of the tier 1 VCs were involved in FTX as either equity or token, and they will probably be writing off that investment, just as Sequoia Capital announced over their Twitter that they will be doing. Expect a slowdown in funding, and especially maybe on centralized solution deals. The usual VC funding deals, though, take months to structure and close, so we'll still be seeing rounds getting closed in the coming weeks, but keep in mind that the actual capital deployment right now will surface maybe in a few months. So we'll be keeping an eye on that, and we'll be keeping reporting here what we're seeing. The first deal that recently closed is Fluidity. Fluidity announced that they raised $1.3 million in a seed round led by Multicoin Capital, and also other VCs participated like Circle Ventures, Solana Ventures, around 10 other VCs and angel investors. The funds will be utilized for the upcoming mainnet launch, which should be happening sometime this month. Fluidity also has already 100k development grants from protocols such as Solana, Polygon, and Compound. A bit about Fluidity: they aim to solve utility problem in DeFi by offering rewards to users for their on-chain transactions. For example, users can wrap stablecoins with Fluidity, for which they will be receiving Fluid counterpart of that stablecoin. For example, this can be done with USDC, which in return will become FUSDC. This works on multiple stablecoins such as DAI, USDT, and FRAX. And the yield is sourced from lending out the underlying assets on money markets. The second deal comes from Aberdeen, one of the UK's biggest asset management firms. They led a $28.5 million Series A funding round into the digital exchange Archex. Aberdeen also became the firm's largest shareholder earlier this year. The investment included backing also from Tezos Foundation, Bitrock Capital, and C Innovation Capital, among others. Archex's proposition is very interesting. They're offering institutional investors custody and ability to trade digitized and tokenized versions of real-world assets, as well as some traditional securities and cryptocurrencies. It is also the first exchange offering digitized securities that got a license from the FCA and now is working on a range of crypto exchange traded products. If you made it so far in the video, you definitely deserve an award. So please write something in the comments, because next week we're gonna be picking up one of those comments to earn 100 CHSB. Thank you for listening and wishing you a great week ahead.